Hi there, welcome to Markets Tomorrow right here on ET Now in the Mumbai News Center. I'm Tanvi Gill, and let's start off with a quick summary of the market session today. A quiet start to the trading week and the markets were range bound at best. Consolidation was really the word on the street. It continues at the start of this week's trade. We saw the markets really being range bound and that too in a narrow range after a brief up move in intraday trade. Concerns of economic slowdown spook investors. All eyes now on corporate earnings beginning later this week. In the row over transaction cost, OMC's Blink First offer to bear e-payment costs. Stocks take a hit, but it is the consumers who are cheering. Oil Minister shows no burden on the common man. You heard it first on ED Now, and it's official. Urban the Pharma notches healthy gains in trade after it acquires Portugal-based Generis for 135 million euros. The all-cash deal, which is likely to be completed by next month, will strengthen the drug maker's margins in Europe. Meanwhile, regulatory woes sink granules in trade. Portuguese health regulator raises the red flag on its Telangana unit. Inspection report flags 11 observations, cites deviation from general manufacturing practices, also indicates immediate recall and suspension of 4 products. Meanwhile, BEML shoots up over 20% in intraday trade to hit a 52-week high. Government clears 26% strategic sale in the heavy equipment maker. Stake sale may add over 1,000 crores to the exchequer. Also, Pokarna surged nearly 20% in trade after its wholly owned subsidiary partners with IKEA India to serve its exclusive quartz services as well as installation partnerships. Under the agreement, Pokarna will supply engineered quartz countertop and will also undertake measuring, planning, installation and home delivery of its products to IKEA's customers. Meanwhile, Fortis Healthcare has moved higher to record highs in intraday trade, extending its month-long gain on the BSE on the back of heavy volumes. In the past 1 month, the stock outperformed the market by gaining 18% after media reports suggested the promoters are looking to divest their stake in the company engaged in healthcare facilities. Okay, that's a quick summary of the day's action. With voices lined up on the show, we will of course make sense of the markets. Sunny Chavan of Angel Broking joins us with his perspective on trade. We have Shabani Sarkar Kurian of Kotak Mutual Fund also highlighting her own investment philosophy. The question of the day that we start off the discussion with is, will the Nifty be range bound between 8,200 and 8,300 in the near term, at least through the course of earnings that will unfold before the budget? That's the remaining 3 weeks of Jan. Sameet as well as Shabani, good evening to both of you. Let's start off with that very question. Shabani, what's your own sense about how the earnings trajectory would pan out? Would there be shocks here, or do you think the markets are prepared given the advanced tax payments that the dent may not be that hard?
Yeah, hi, good evening. You're right. I think one of the key events that the market is now looking forward to is the earnings announcements that will start from tomorrow itself, with one of the banks reporting earnings and then IT companies later during the week. In the run up to the earnings season and the budget, we expect that the markets would remain volatile. While it's still too early, or we still not had the exact impact of the demonetization on companies, there have been anecdotal evidence that has been coming out in terms of what the companies are reporting and saying. So when you look at the auto numbers, for instance, while there was a segment which is the two-wheeler segment which did bear the brunt of demonetization, the four-wheeler passenger vehicle segment and the tractors did better than what was expected. Similarly, for cement, in certain segments, especially in the south, there are instances of volume actually holding up contrary to expectations of a very sharp cut in terms of volumes, and pricing has also remained stable. So anecdotally, evidence is coming that things are possibly not as bad as what it was earlier and anticipated, but we would have to wait and watch and see what the numbers finally come out to be. And in that run up, this kind of volatility that you're seeing in the markets would possibly remain. As I mentioned, the banking sector starts off the earnings season followed by IT. IT, of course, does not get impacted directly by demonetization in any way, but there are other structural and cyclical elements which are impacting the sector, and also the lot of rhetoric that is coming out from the US with the reintroduction of a bill which talks about raising the minimum salary for H-1B visas. So IT as a sector, it being as it is a seasonally weak quarter with furloughs, etc., is a sector which will possibly see muted numbers, and some of that is already built into expectations. What needs to be watched out for is management commentary in terms of what is the outlook for demand going forward. Are there signs of improvement or not? And I think this is true for across all sectors, whether the Q3 numbers may not really reflect the actual impact of demonetization. We might have to wait for Q4, but management commentary here is going to be extremely important in terms of how they are anticipating the impact on demand and the way forward. For the banking system, clearly loan growth is something that is likely to be impacted, and we've seen the credit numbers that RBI has released. On the other hand, they have also benefited because of the sharp inflows on the deposit side and the CASA accretion. Asset quality trends, at least on the large corporate side, seem to have been stabilizing. RBI has already given dispensation for banks to defer NPL recognition for small ticket loans, so we will really not get to see the impact of that in the Q3 numbers per se. So overall, I think markets will wait for cues from the earnings season. As of now, it does appear that a lot of it is getting factored in, but volatility can definitely not be ruled out as the numbers come out.
Okay, Samit, very quickly on the charts, do you think that the market is stuck in that range, or will we see a breakout?
See, according to us, it will be very temporary. Nifty has already completed its 50% retracement, and the important support level was seen around 1700. We have already seen a smart recovery from those levels. However, after moving nearly 400 points in 7 to 8 trading sessions, yes, it was quite evident to have some kind of profit booking that we saw on Friday as well. So we believe that this would just be a breather before the next leg of the rally. We expect a breakout beyond 8300 quite soon. 8200, 8180 is likely to now act as a very strong support, and going forward we expect Nifty to move towards 8400, 8450, which would be our near-term targets.
Okay, both of you just stay on with us. I just want to mark one more trend that stood out in the market session today, and that was a rally in PSU stocks, BEML, Engineers India. All of the stocks rallied. Avan joins us with an update on what's leading to this frenzy in state-owned companies. Avan?
PSU stocks were on fire, very excited in the session, and one that really stood out was BEML. The reason being that the government has approved the divestment of 26% stake to strategic buyers, and what we understand is that the current stake that the government owns is about 54%. In terms of a timeline, this is likely to take place by early next fiscal, although what had happened last time is likely to occur again, is that the employee unions might just oppose the move. The stock shot up 20% intraday to hit a 52-week high, and remember, a stake sale will add something like 1,000 crore rupees to the exchequer. But it wasn't just that. You had MMTC, which shot up very smartly, hitting a 52-week high. EIL, the stock has seen a great performance so far. The stock has doubled in 2016, and analysts expect strong order wins to come in and boost the overall margins for the company. BEL, PSC, REC were some of the other stocks from the PSU space that had a great run today.
Thanks, Avan, for that. We'll head into a short break right now. As we do so, hear out some key market opinion on what lies ahead in terms of Q3 earnings unfolding over the course of the next 3 weeks, what that means in terms of a cue for the markets. Hear that out, and when we come back, we'll focus on tomorrow's session. Important earnings lined up, with Innocent Bank kicking off earnings season.
For the last few years, the growth has been coming down. It just looks very high simply because the overall credit growth in the system is hardly anything, and that's why the growth looks high. But if you just look at the housing finance space, the growth is coming down. So I would not say that pharma dream is getting over, but at the same time, I would say that this pharma dream was overestimated. Pharma globally is a sector where regulations sort of play a very important role. And when they play a very important role, there's bound to be volatility, there's bound to be cyclicality.
There has been a lot of FIIs selling over the last 2 months, and that's what keeping markets down, other than the demonetization related fear. But one thing is for sure that this will be the year of earnings recovery for the broader index. I think that's the biggest trigger. Budget of course continues to be a trigger, but I'll mainly watch out for earnings recovery this year, which should really aid the markets. Last 3 years earnings has been depressed because of PSU banks and metals and other such high beta names, real estate too. So I think recovery in PSU banks and metals earnings is what will start happening from Q3.
Welcome back. You're still watching Markets Tomorrow right here on ET Now. An important earnings coming in tomorrow. IndusInd Bank is going to be reporting its Q3 numbers. This has been a consistent performer. You know, many on the street call it the new age HDFC Bank because they have done so well quarter on quarter consistently. 3 months return is about 5%. We should bring up the 52-week return on IndusInd Bank. That's of course a 4-month performance, but the 52-week performance would be interesting. But you expect a very, very stable quarter from IndusInd Bank. That's nearly 24% up on the stock, which has weathered 2016 better than most other names on the street. Come to you, what's the sense, Shivani, on IndusInd Bank and large cap private sector banks right now? You know, the view on PSU still remains a bit iffy. Is the trend clear for privates?
Yeah, without going into stock specifics, when you look at the banking sector as a whole, we'll divide it into 3 parts where we talk about the privates, the PSU and the NBFCs. Within the private sector, clearly the smaller private sector banks have been more agile and they've been able to possibly buck the trend in terms of the slowdown in terms of loan growth. So maybe you will see better numbers from the some of the smaller private sector names. Among the larger private sector banks, clearly while they will still continue to grow significantly faster than the industry, loan growth will possibly be lower than what you have seen in the past, and that is something that might impact their overall margins. Apart from that, on the corporate asset quality side, we've seen stability coming through. We have not seen any major, or we don't expect to see any kind of major slippages on the corporate side, but clearly the jury is still out in terms of how the SME and the small ticket retail portfolio will behave post the demonetization. And as I mentioned earlier, RBI has given this dispensation for banks to defer recognition of NPLs for small ticket loans. So the impact of the same may not be known immediately in the third or maybe even in the fourth quarter per se. In the PSU space, I think that we have a favorable base vis-a-vis the same quarter last year when the impact of the asset quality review was felt. So that is positive for some of the PSU banks. But clearly from a loan growth perspective, they will possibly grow at a pace lower than the industry, and that is likely to have a bearing in terms of their margins and core profitability. These banks might show numbers which will be supported possibly by treasury profits which could have been booked during the quarter, but core profitability would still be under some degree of stress for the PSU names. NBFCs will have varied sort of numbers, and expectations are that certain NBFCs which have been more impacted by the cash crunch would possibly show a slowdown both in terms of disbursements as well as collections. So NBFCs numbers could be a little tricky. We will need to watch out for and see how these numbers pan out, but I think the NBFC space, especially those which are directly related to real estate, loan against property, and maybe even the small ticket MFI segment could see an impact during the quarter.
All right, IndusInd Bank after 24% return on a 52-week basis. Samit, how much more do you think there's in store for this one?
See, post the demonetization announcement, this stock has given a sharp decline from higher levels along with its peer counters. However, after a consolidation of nearly 3 to 4 weeks, this stock has managed to give a good recovery from lower levels. 1100, 1110 was acting as a very strong resistance. Since last 3 days, we have witnessed a good positive traction in this counter. So, looking at the overall near-term charts, this stock is poised for further up move. Probably in next few days, we expect this stock to extend this rally towards 1180, 1190, which can be seen as an immediate hurdle. On the lower side now, 1100, 1120 would act as a very strong support.
Okay, fair enough. Aside of banks, is also going to be focus on the auto space. Because of the sharp correlation to what's happening with auto sales in terms of indicating the health of the economy and the recovery process. What's your broad view on autos between passenger vehicles, commercial vehicles and two-wheelers for that matter, Shibani?
So autos, if you looked at the numbers which came out fairly recently, the segment that seems to be the most impacted post demonetization has been the two-wheeler segment, and that was mostly on expected lines given the kind of dependence that they have on cash. Surprisingly, the four-wheeler segment seems to have held on fairly well, and the numbers seem to suggest that, and also the tractor segment where numbers were better than expected. On the commercial vehicle side, clearly the linkage is there to the economy as a whole, and there could be some amount of improvement in terms of demand prior to the new emission norms that come through. So I think as the economy recovers, we will possibly see some improvement on the commercial vehicle sales per se. Overall, as auto as a pack, we continue to remain fairly positive on, while there would be near-term impact because of the demonetization in certain segments. We think that overall the demand would remain strong, and as we go into FY18, the revival in demand as the impact of demonetization starts to fade out would be fairly sharp. So we as a house continue to remain fairly positive on the auto sector as a whole.
And among the movers on the index this afternoon, Eicher Motors is now knocking at 23,000, again resuming its uptrend. And there was a fair amount of traction that we saw in Maruti Suzuki once again. What are the targets there? Because these two have been really the strong bull calls technically within the auto pack. Samit?
See, from the entire auto space, of late, Maruti Suzuki, Tata Motors and TVS Motors have been our preferred picks. Maruti has already given a good rally. Eicher Motors on Friday has given a good positive traction. So from current level also we expect further upside rally. But if we have to pick any of these counters, then we would rather prefer Tata Motors and TVS Motors at current level. Clearly Tata Motors has already broken out from its major resistance of 498,500, which has been acting as a very strong hurdle of late. We expect Tata Motors to move towards 520, 522, which would be our near-term targets. And as far as TVS Motors is concerned, this stock has given a decisive breakout last week from a triangular pattern. The major resistance was somewhere around 377. The stock has already given a good decisive move, but we expect the stock to move towards 399 to 402, which would be our near-term target. So any dip in this particular stock would be a buying opportunity, and we see this stock forming a strong base around 360, 365.
Very quickly, Samit, help our viewers with strategies to approach trade tomorrow.
Since we are positive on market, we would recommend two stocks. Both would be on the long side. Britannia, this stock has already formed a strong base around 2800, 2850. On Friday, we saw good recovery from lower levels with rising volumes. Thus, we expect this stock to move towards 3030, which would be a near-term target for Britannia. Stop loss would be around 2842. Our other buy call would be on Century Textiles, which has been maintaining its higher bottom formation. Thus, we expect this stock to climb towards 882. Stop loss would be around 813.
And very quickly, Shibani, your top sectoral pick, the sector that you're most overweight on?
So from a sectoral perspective, we continue to remain positive on the auto space. We are positive on banks, especially the retail private sector names. We are positive on cement, and we are positive on oil and gas as a space. So these are the four key sectors where we are overweight on.
Okay, and since we have a little more time, what about the underweights? What is it that you're avoiding in the market?
So telecom is a space we are avoiding. IT as a sector, we continue to remain underweight. We think that there are headwinds, both cyclical and structural, in IT. there is again a lot of noise that is coming up because of the visa related issues. We don't know whether this will actually fructify into something concrete or not, but this time around there is a possibility that visa costs and wage costs for the sector as a whole could go up. While it is true that any legislation to become reality will take maybe 6 months or 10 months, or it's going to be a fairly prolonged affair, but the kind of noise surrounding it would possibly bear on the sector as a whole. Valuations are undemanding, yes, and these are companies which have strong cash flow characteristics, so clearly there are certain stock specific opportunities which are there, but overall from a sector perspective we continue to remain underweight on IT.
All right, Shubhani and Sumi, thanks very much for taking out the time to speak with us, share with us your insights and thoughts on the markets. We wrap it up on that note, but we'll track all the market action for you as always tomorrow morning at 8 a.m.